rental is clearly the way of the future. When do you expect to see a massive paradigm shift away from hard copy textbooks rentals towards electronic textbook rentals?
We'd like to see it sooner. The reality is there are three things that are going to drive it. One will be whether professors require it. That's not likely to happen. The second one is when the actual interactive nature of them gets better and more effective than a print textbook. That's beginning to happen. And then when the prices fall, and we're hoping for that soon, because today an e-textbook might cost you $85, a textbook rental from Chegg costs you $42. So it's just a much better value in print right now. I expect over the next couple of years it's going to happen pretty rapidly.
The newest version of a textbook is always required, and how does that impact your business model?
Unless there's real change in the textbook that changes the value proposition to the learning, we don't think there should be changes. When there is a change in the value proposition to learning, we welcome those changes. When it goes to digital, it won't be difficult to do. You can change it immediately. You can change all previous copies. So we're excited about that because we want education to be more affordable, more effective. We want better outcomes, and Chegg helps students get better outcomes and save money doing it.
If Amazon.com starts to make a bigger push into textbooks, how's that going to impact you guys?
Amazon has been in the textbook business longer than we've been in the textbook business, and you can see how we've been able to effectively offer a value proposition to students that's greater than theirs and greater than most, if not anybody. And so, you know, we have the ability to compete, we have the balance sheet to compete, and as it goes digital, we think our ability to compete becomes better. If we know this, we know your high school, we know the college you got into, we help you plan your classes, we help you pay for it, and we can get you your required material, and then additional learning material, then why would anybody else go elsewhere when our prices are similar or better than anybody else's?
Which brings me to my next question about profitability. Can you talk a bit about that?
Sure. You know, profitability is, it's really just how much are you willing to invest against the biggest opportunity. So there's a $1 trillion education opportunity. We're going after four big buckets: the $50 billion brand market, branding to advertisers to students, the $6.5 billion college recruiting market, which we go after with our Zinch product, the $100 billion learning market outside of required textbooks, tutoring, SAT, and of course the textbook market. So it's so big that almost all the capital we use is literally to buy the print textbooks. The rest of our business is growing at 100%, 80% gross margins. So the business we're going to be exiting in a few years is where all the costs are. The businesses that are growing like crazy are where all the profits are. So to not invest today, which would mean for our investors, we're not going after the biggest market opportunity, which is a $1 trillion market. So it's really just investment capital.